The Hedgeless Horseman here. It's September 2nd, 2022. In this video I'll talk about investing strategies, how my investing strategy has evolved, the benefits of a bear market, sentiment and all that other stuff that is kind of required, I think, for investors to grasp in order to have good long-term results. And I'll just start off with I think a bit of a funny exchange or a tweet. Aaron here, I know Aaron, I talked to him, we're buddies, and he's one of those people who watch every daily swing in metals and stock prices, etc. So you know when gold and silver and whatnot is up or down from his tweets. Anyway, he posted yesterday or tweeted yesterday, I told myself I will never buy another miner. I might go back on this if we see gold in the 1500 range, which I think happens if the XY hits 120 again. So, I mean, first of all, he puts out an absolute. I mean, he says that he will never buy another miner. So when you think about it, his lesson is, or his conclusion has been, after this 2-year-long bear trend in miners, that you can't make money in miners. So I told myself I will never buy another miner. So that's I would see it as, you know, kind of giving up in a way, because obviously not all miners are the same. I mean, majority of miners will never amount to anything, or if you give them long enough, you know, a long enough time frame, they'll, if it's a producer, they'll deplete all their ore, etc. But that's basically throwing out the baby with the bathwater. That I mean, he's basically saying you can't make money in miners, and I know this, and that's why I'll never invest again. And you know, maybe if it goes down even further, he's open to getting back in, which I think happens if the dollar hits 120 again, the dollar index. So that's like, again, that's an if, not a when. Well, I guess one could say it's a when and if. He might do it if something happens. But I find it a bit fun. It's like, when you think about it, when I look at Bear Creek Mining, the proxy, for example, my junior sentiment proxy, it has wild durations. It goes up hundreds of percent from bottom to top, and then falls like 70% or more from top to bottom. As sentiment goes up and down, we go from low sentiment to high sentiment to low sentiment, higher sentiment, low sentiment, yada yada yada. Obviously you could make money just based on sentiment, so you shouldn't say in that case, I'm never buying miners. No, you should in that case obviously buy miners if you're just playing the sentiment beta, when, not if, when sentiment is low, because you would catch a lot of this, especially now. I mean, it's back to extreme, so I just found it kind of ironic that it's like, this is when most people say, I'm never buying miners again. Whereas, you know, if you look at this track record, that this is like the, I mean, you'll see these levels of, you know, depressed sentiment maybe 4% of the time. So this is like the, if you go by that alone, this is the top 4% of time when you should actually be incredibly bullish, if you know what I mean. But that's typically what happens. We get in late, we buy high, we ride it all the way down, and then we sell out because we can't take it anymore. But like we know, I mean, the bear market is the author of the bull market. So when future returns are at the top 4%, top 4 percentile, let's say, that's when people give up and sell. And I mean, you should always think about your investments. For example, I mean, what would you do if you did not have a position? If you hadn't been a part of a 2 year long bear market and you just found this sector right now, you would say, oh my God, how lucky am I? I'm able to, get into this sector, for example, uh, at a level that almost never comes along. Once every like 10 years, you'll see something like this. Uh, and yeah, so on that note, like bear markets, I like a quote here from Marcus Aurelius. I'm currently rereading. I think I've read it before. Meditations by Marcus Aurelius. I like some of his stoicism he preaches. Be the stone cliff against which the waves constantly break, standing firm against the fury of the seas. Am I unhappy because of what happened to me? No, I remain happy because regardless of circumstances, I am free, neither crushed by the present nor afraid of the future. Storm befall everyone, but not everyone can stand firm against them. Why I call this event unfortunate? From another perspective, it might be considered lucky. Basically, it talks a lot about the old saying that 10% is what actually happens to us, 90% is how we look at things. And when you think about that, it becomes kind of obvious in a very volatile market, very sentiment driven with huge swings, that someone will look at these downdrafts as a curse. Because the past has been painful if you see it that way, but the future returns, the lower something goes, the higher the future returns goes. So one can look at this current situation as a deep curse that I'm never touching miners again. And that's the end of it. Other people who, especially, let's say, the ones who understand sentiment and volatility, and that sentiment always changes, it always changes, would look at this as let's say, the greatest gift since 2015-16 or 2008-9. So like an incredible gift, an incredible opportunity, whereas some see it as the curse of all curses. Exactly the same sector, same situation, you have all the same opportunities in front of you. It's just that some don't view it as opportunities and some do. So think about it. It's like everything comes down to, let's say, mindset. If you look at the past performance and make predictions about the future, as a linear thing, this is the short of death right now. But when you think about it, it's like what happens in the future every time we go this low? There are massive, the highest returns possible comes from the lowest extremes, obviously. So in one way, it's like this is probably the best opportunity when you should be mostly bullish and buy more and more. But people, typically over 90%, they sell instead. I talked to a broker recently. He said that funds were having a lot of redemption. So basically a lot of the selling out there, I think, is not just, individual stock pickers and whatnot. It's just, fund managers who might not, they might know that this is an opportunity to buy. But if they get redemptions, they're forced to raise cash. So they're forced to sell because the investors want to get out of the sector or need the money. So that's also, again, think about it. It's like when you consider the fact that the vast majority, almost everyone you see on Twitter or whatever, does not make money or does not beat an index over the long term, then you should start to let's say, if you disagree with a lot of people, that's probably a good thing, actually, especially in this market. And now, yesterday, I was kind of active on Twitter, trying to keep the morale up, etc. But it was kind of dead quiet. There's almost nobody that's bullish. I mean, people are ashamed to be bullish gold and silver and miners, etc. And you see people lambast people who have been bullish. I mean, I'm typically perma bullish on good companies, and so I ride, since I'm 100% invested. Pretty much, I have been 100% invested throughout all this time. I mean, I'm riding from top to bottom with a full position. And not just a full position, but pretty much my whole net worth. I've had, been, my whole net worth is riding 100% invested from top to bottom. Almost. I mean, I have some cash, obviously, but not a lot. So I mean, you cannot have much more pain than that, because a lot of people are like disgusted with this sector, even though they have, I don't know, 20% of their net worth in it or something like that. I'm pretty much, I mean, at max pain capacity, because I am fully invested, and I'm still not going psycho and throwing the baby out with the bathwater. No, I know this is how it works. I've seen it. This is my fourth large correction, I think, or fifth. I've seen it all before. So I can afford to be long from the absolute top, fully invested, because I'm always have been 100% long from the absolute bottom tick. And since I tend to get more bullish the cheaper something goes, I buy more and more and more. I ramp up my buying. I don't ramp up my selling as it goes lower. So, for example, if I have 100% invested here, let's say $10,000, and it goes down 70%. But from here I have now $12,000, let's say. When it goes back up here again, I will have more money than here, because if I buy all the time, I average down, and the longer it is down, I can buy even more and more shares, obviously. And if you get better at the same time at investing, the ROI on your invested capital is going up. So it's like bear markets. I mean, I had, let's say, a first phase here when I got into these miners. I think I started buying around I think it was around August or something, or maybe September, October. So in hindsight, yes, that was incredibly lucky in terms of timing, because I wasn't in for this whole move. And who knows? I might have invested, started investing here if I knew it, or up here. Doesn't matter. Past is the past. But I saw that, okay, I read that silver juniors, etc., especially silver juniors, I think, are extremely cheap. And I heard about, $50 silver and all that. But I just looked at some, charts, basically. I saw, Endeavor Silver down 87% from top to bottom here. And I think I remember actually investing in Bear Creek. I think I got 500% on that one. And Great Panther Silver was also like 400 or 500% from bottom to top. So what did I didn't know much about mining. What I did know is that I understand the concept that you should buy low and sell high. You should buy cheap. I didn't really know what I was buying. I just saw the declining share price, like 87% down. I mean, that's incredibly low in that case, just from absolute terms. And I read that, you found companies, they have a lot of silver, it's priced like this, but the silver ounce in the ground at highs are priced like, let's say 8 times higher or something. So I didn't know much about mining, but I had a firm concept of buying cheap. So I bought all the way down to I bought the day the sector bottom ticked. I remember that kind of clearly. I think it was the exact day, or maybe 2 days apart or something. But I remember it was silver or gold was down a bit, and you had Silver Standard, which is a pretty big company, was down like 10% when silver was down 1% or something. So that's like capitulation, and I got really greedy then. I just plowed into Silver Standard, I remember. And then all of a sudden, one day, the bottom was in it. It just ramped and ramped and ramped. And the next 8 months, I think it went up like 6, 7, 800% or something, my entire portfolio. So you can afford buying in close to tops if you're also 100% long from bottoms. Because just think about it. If you're 100% long from each bottom, I mean, if you're down 50% going into one of these major bottoms, that's nothing. The juniors go up way more than 100% from bottom to sentiment top. So I don't see being down 50% like right now, not even 60, probably not even 70 actually. I mean, again, depending on how good you are at stock picking, let's say. That's not really a problem, but it feels like an immense, insurmountable problem. I remember one guy who was a fellow investor around in miners here. He had a portfolio of like 20, 30 mining stocks. I remember him posting a screenshot around this time. All were down like 50 to 60%. And then like 8 months later, he posted a screenshot. I think every single one was in the green. And 100 to 200% or some even more. So he turned, his portfolio got cut in half, every single junior, every single miner. And 8 months later, his portfolio was up a lot. The average junior was up like 100, 200, 300%. And that's not from the bottom. That's from first being down 50%. It can turn on a dime. It really can. And sentiment plays a huge part in this sector. It's like, I mean, why did I make money here? It's not because I was so smart. I was lucky with timing, but understand that you're supposed to buy when it's low. That's pretty much all I thought about. Okay, this is cheap. I see it's cheap. People say it's cheap. I look at the shorts, they're down 87%. This must be cheap then. And just plowed and plowed and plowed. But yeah, so this phase was mostly beta and luck. But at the same time, not only luck, because I at least was rational enough to understand that this sector is totally bombed out. If it's down 87%, that's pretty much totally bombed out, and it was. Then I guess I think I switched to more high potential, more drill plays. Because then I started to, I tried to learn as much as I could about mining, and everybody was talking about exploration and stuff like that, and beta had been sagging a bit after the top, so they went down, and then you're trying to fix your downtrend, let's say. So I'm like, okay, yeah, I'm gonna speculate in drill plays and all of that. And during this time, I remember I was at one point all in Novo Resources going into bulk samples, which one could say was the equivalent of being all in for a maiden, let's say maiden drill campaign. So it's like 100% speculative, way too greedy. And since then, I learned my lesson. My portfolio got, hit by 30% down in one day, and that was basically my entire net worth. And since then, I have not been all in on any exploration stock, and I'm not too keen at all anymore, really, when it comes to pre-discovery plays. So that turned into, again, I was constantly learning and learning. So beta, I start to understand, yes, it's a double-edged sword. Beta has a time and a place, and that's pretty much now. High potential is almost never a good idea unless you actually just play the hype going into some drill plays. Made in pre-discovery plays that it's a big target and you can ride the hype going into that. But that also requires sentiment that is not I mean, as poor as now, because now there's almost no hype in any drill play really, and even if they hit something, you don't really get rewarded for it. Well, some do, but it's like quite rare. But nowadays, lately, I mean, it has evolved to more focus on alpha. I talk about it all the time. Lately that I want. I prefer alpha probable growth. That the main value creation is not up to the price of gold or silver, but up to the company itself. And to have probable growth, you need to have a discovery, and preferably a system, etc. And a situation where the company can add a lot of value in the shortest time possible. But I also prefer it to again be probable value, because any drill spec can hit a discovery hole and go up 100% and create a lot of value. But that has maybe a 3% chance of happening. But if you make a company's made a discovery, there's probably going to be, if they made a robust discovery, like in the case of Snowline, for example, which hit over 100 gram meter holes from the get-go, that is a sign of a very robust system. So one could think then that there's probably going to be more, that's probably going to grow. They're going to drill more, and the more they drill, the more it's going to grow. So that's up to the company in that case. They will create more value with the drill bit than the gold price can help with. And again, if you don't even have any gold, who cares if gold is at 10,000 or 2,000? If you have no gold, you have no leverage. And then also, I would say smart beta. Basically that, yes, at a time like this, which is akin to this and this, I don't think, dumb beta is a bad idea. I don't think really diversification is a bad idea right now. But most of the time, I think it is, let's say, a bad idea. Again, it's a time and place. Now I'm not at all against buying, let's say, mature companies, etc. It's just that it is, again, a double-edged sword, because if this continues, they'll do nothing. But you can still have probable growth plays that if the sentiment continues to be poor, they can do okay, because they'll create so much value. But at the same time, with that said, if you buy, let's say you buy only beta plays here, you only buy developers or mature deposits and stuff like that, even if they continue to drag on, and with dilution, it's basically, well, say if you include dilution, that it's actually, if you count the bottom to top pick in terms of potential. Dilution obviously means that the share price would need to go even higher to have the same market cap it had with a previous share structure. So let's say that as time passes, yes, there's like a time penalty because they dilute somewhat at least. But it's like that could go on for quite some time without it being actually in the long term a bad idea. Because from here, for example, if sector was shit for another year and you diluted it by, I don't know, 30%, so let's say actually that goes up here, before the bull kicked off again, that's still like 225% from this level here, or which would be from this level when you account for the punishment of dilution. You could wait a long time to get a 225% return, and it would still be worth it. Like I've showed before, everybody wants this kind of short. The share price just goes up and up and up and up. Whereas, I mean, you would make even more money if a stock did this, and you were buying all the way, all this time. So I mean, when we think about future returns, if we want to maximize our long-term results, we want to see periods of this that go on for could go on for a long time. Because let's say they keep on being down here, valuations. If we can buy, maybe we up our portfolio size by 20% over the next year. at the same prices we're seeing now. So this center totally sucks for another year. When the inevitable rise comes along, you'll make a lot more money than if it turned today and just went this direction. Because any additional purchase would have lower and lower and lower future return. So so again, if we are rational about things, we should love prolonged periods of extremely cheap, an extremely cheap sector. Of course, one problem is, yes, access to capital, yada yada yada. So I mean, if it goes on too long, let's say, one might get more and more diluted. I mean, some companies might go bankrupt, etc. But I don't see. I mean, typically these extremes don't last that long. And we're already here, so I don't get the idea of, like, I mean, why are you afraid of buying juniors now? It's because you think it will go like this. Yeah, we can go lower for sure. But it's like, what are the risks to the downside and risks to the upside? History suggests that the risks to the upside are extreme, and it's a matter of when, not if, unless the sector goes away, and it will not go away. I mean, if it does go away, our civilization goes away, and then it doesn't matter. Just one interesting thing. I watched a video, interview by with a guy he sells newsletters, and I don't have his name here in respect to him. Basically, he was interviewed, might have been Kitco or something, and this is from the description of the video. He's feeling less optimistic about resource juniors. And then I have a quote: "I am basically exiting the junior resource space at every opportunity where I can take profits or break even." X said, "Or I'll do some tax loss selling at year end and convert that to US dollars." So he's basically, I'm getting out of this sector. And this is quite an old guy. He's a newsletter writer. So he gets paid to, people pay him for his investing advice, pretty much. And I'm like, I mean, he's probably a good geo, knows a lot more than me. But it's like, my first impulse is like, yeah, you'll probably will be forced to sell newsletters till the day you die, because you're not gonna get rich on your own, in my opinion, if your mentality around these extremes is to get out of the sector. I mean, it's hard to buy low or sell lower than this. There's just a few times that the sector has ever been cheaper. So I mean, Jesus, he's less optimistic about reason. When would you be more? I mean, you should be less optimistic the lower the future returns are. Here's when you should be not optimistic, let's say. Because if we just assume that we'll at least get a decent sentiment spike and reach these levels again, I mean, up here the returns for let's say 2 years is like zero, but the lower the sector goes, I mean, the returns go up. The returns go up, and then we have Rick Rule here, which is, I mean, he's rich as hell, and he's smart as hell. And what is he's saying in a recent interview? Collapse in juniors is a buying opportunity. And I put up on Twitter recently where he was interviewed, I think a few days ago, or it was uploaded a few days ago, and he was asked about gold miners, and he said that they are the cheapest he has seen in his 49-year-long investing career. So basically the risk reward in gold miners hasn't been better, according to Rick, in 49 years. So if you're selling into this environment, if you're selling when the best opportunity in almost 50 years comes along, as per Rick Rule, I mean, how on earth you can't? I mean, there's by definition you are not able to spot an opportunity. I mean, you wouldn't what's that? You wouldn't be able to hit water if you fell out of the boat. I mean, it's just incredible. And again, this is like the other quote here. This is from again a so-called professional who gets paid to give advice. And I don't think he's a scumbag or anything like that. But there's a reason he's forced to sell, let's say, newsletter, and might need to sell newsletters for the rest of his life. When I started investing in juniors, I had nobody knew about me. I knew no one that even dealt with miners. I knew no one that owned any miners. My focus from the get-go was I want to become the best investor I can be, and then maybe you can make something out of it. Nowadays I have banner sponsors, for example, but I couldn't have banner sponsors when I was unknown. So it's like I had to build a reputation, and I built that, I think, because it's like, okay, I got better and better as an investor. And I wouldn't be comfortable doing videos like this if my returns were, piss poor, let's say. Or because I have evidence of like my train of thought, being a profitable way to go about things. But I just want to, I guess I just want to show, it's like the quote from Marcus Aurelius, how you look at things. This guy's getting out. He's pessimistic. He's getting out. He doesn't see why should we be invested in this sector. Whereas Rick Rule, who is in fact very rich and very smart, and is not a geologist, I think he has a credit background, but he has the investing strategies nailed down. So even though he's not a mining engineer or a geologist, he understands markets, he understands investing, and he's describing this as the best opportunity in the last 49 years. Whereas other in the same kind of profession basically feel that this is not the place to be. So, I mean, think about that. They all see the same charts. They all see the same gold, silver price. They all can read the market caps of companies, etc. But they have totally different conclusions. And this guy is even a industry professional in terms of being having experience from the actual mining business, the actual fundamental side of things. Whereas Rick Rule is a very successful investor, not a great geologist or a mining engineer. But he for sure understands investing. So again, it's like a point I made which stirred up a lot of hate on Twitter. That just because you're a geologist or a mining engineer doesn't mean that you know anything about investing in this space, really. Because in that case, this, geologist with decades of experience, how on earth can he come to such a stark contrast in opinion relative to Rick Rule? And Rick Rule is the one who's like, I guess, close, if he's not already, a billionaire. Or maybe not a billionaire, but like super rich. He doesn't need to sell newsletters. So he has the results. He doesn't need to sell newsletters. And like I think I joked about this, if you see me selling newsletters in 20 years, who's the biggest fool? Me or you, for thinking that if I haven't made enough money in like 30 years, that I can't, that I still need to sell newsletters. Who's the fool? If I get 20 more years, if I am a good investor, I shouldn't need to be selling newsletters in 20 years. I mean, when you think about it, it's kind of, I mean, I don't think people sell newsletters because they love selling newsletters. I think they sell newsletters because they need to sell newsletters. And I mean, don't get me wrong, I have banner sponsors as well. So it's like, I for sure appreciate the additional income, but nothing is going to compare your salary hike or whatever. It's not going to compare to your compounding results if you become a good investor. And again, that's why it's like the bear markets. You get time to learn, and since the opportunities get better and better the worse it gets, I mean, if you know more here than you knew up here, not only are your stocks gonna go up on average more from this point, you probably will have picked better stocks that will go up even more. And I mean, how much do you think I learned during this ramp up here? Not much. I was just watching the portfolio go up. It was not until times got tough that I started, okay, hey, maybe this isn't as easy as I thought. Maybe stocks don't always go up. So it's like, now is not the time to throw in the towel and walk away in disgust and say, I'm never buying miners again. Now, if this is the best opportunity in 49 years, you can just imagine what, if you increase your, let's say, quality of your investing decisions by 5% at the best time in 49 years. I mean, you can just imagine the leverage on that knowledge, what that would be. Heck, I mean, I think if you catch one of these bottoms, you'll probably earn enough in a short time span that you could basically sell out and would have beat the market for the next, or the stock market for the next 10 years. If you catch one of these, I mean, this was what, 2,000%. The market averages 8% per year. If you catch one of these bottoms, and we're not even talking a 2011 rally, this was like 500%. This was like, I don't know, 400, 500%. The stock market averages 8% per year over the very long term. So you would beat an index, the stock market, if you caught one of these, which only took a few to several months, and then you could basically get out of the market, and it would take the average index guy 15 years to reach your return if you did nothing, did nothing for like 10-15 years. I mean, think about it. I mean, again, it's like, you do whatever you want to do. I'm just describing things as I see it. I mean, I don't know how you can justify. I don't know how you can justify selling this low. And yes, we have tax loss selling coming up, etc. But it's like, if you own a dirt cheap company and you're down 50%, then it falls 30% more. How big of a problem is that really? I mean, let's say you bought Bear Creek here, and I don't own Bear Creek, I'm not suggesting that, but let's say you own Bear Creek here, and it's going to go do this at the next sentiment high. Who cares if it goes down here first? That doesn't mean that you will not get this return. It just means that the journey to that return, let's say, that yes, you were down 30% first. It's like here when I started investing, I was down 50% before I was up 300%. So it's not a mistake. Unless you catch the absolute bottom, you will always be down on a stock purchase. Always be down. So you should just accept that if you think you're buying cheap, it's probably going to go down 30% more, whatever. And still it was not a mistake because you bought cheap. And just because cheap got cheaper doesn't mean that it wasn't cheap. It's just that some person was willing to part with his ownership of a company and sell his assets for even a lower price. AK being an even bigger idiot. It's like I said about 10 baggers or whatever. I mean, you have to probably sit in them like 2-3 years and suck up, 30 to 50% corrections. And it still wasn't a bad play. I mean, in Great Bear, for example, I mean, there were periods it was down 40-50%, and people like, yeah, everyone that bought the recent high was stupid. Yeah, well, until they were not, until it went up and then beyond. So it's like, forget about market timing, forget about picking the exact bottoms. Picking bottoms and tops is for fools, in my opinion, and that's what everybody's doing. It's like Snowline. It has retraced, I think, like 35% or something from the top. But when I look, I mean, people complain about that, obviously. But it's like, hey, I mean, I'm up, I don't know how many percent on Snowline, but even after this retracement, even if it falls down more, it's still a good return. And then one day I think it will go up again and make a new high, for example. I mean, so at the end of the day, it's like the best defense and offense you can have is to always buy cheap as much as possible. In that case, you can afford to buy high as well. But you cannot. The costliest mistake is selling low. That's like the costliest mistake, because if you sell Bear Creek the last like 15 years at this level here, you were giving away 458% return. If you're selling even lower, the person who buys and can sit to the next sentiment high, he's getting an exponentially higher return. So that's what you're giving away by selling. Just a last example. I mean, I think it kind of shows my evolution, let's say. I mean, this is from the bottom in 2016 when miners bottom, and this was the big ramp here, like 500% perhaps. And mostly over this period here, I was in beta first, and then beta gave a lot of returns back. I mean, you can see a big beta in Bear Creek. It went up a lot, and then down almost to the same place. This is the all-in Novo period, down 30% in one day. So that's highly speculative, high extreme risk taking, poor diversification, greed, etc., etc. But you can see, okay, at least bought low, went high. So even if my results over this period of time weren't great, I at least had let's say a flat curve where while the broader market was going down, but it didn't really go anywhere, if you know what I mean. So it's like what 2-3 years of like sideways action, which probably would have put off most people. What I was continuously learning, fine-tuning my investing strategies, thinking about investing. Okay, how do you beat this sector? Everybody says you cannot beat this sector, but it's a very volatile sector. It's like, what do people do? Okay, people like drill hype. People get bored easily. I mean, there's a ton of psychological factors that influence the price of securities, even though the fundamentals can stay exactly the same or don't change a lot. But it's people who are selling and buying. Okay, figure that out. And then it turned into, again, like focus on alpha, focus on value creation, micro first. Don't try to guess where price of gold or silver is going. Don't try to pick bottoms or tops. Just focus on the companies. 90% of the focus, 95% is on the companies. Do the due diligence, which have probable growth, etc. So this is to 2020, 1st of January. And this is the curve in my semi-active portfolio, I guess. here you can see it's like this wasn't really a yes. I got lucky on the beta, or I was smart enough to buy low, and then it just got a bit harder as the sector was getting worse, and I had to do a lot of thinking, and then with the evolved thinking, more focus on alpha. Then you can see, even though the market has been pretty shit, it's like in my semi-active portfolio, you still see higher highs and higher lows, but I have big retracements along the way. But I think this shows, I mean, I'll need more data than this, obviously. I mean, you can only discern your decisions really over a long time period, because anyone can get unlucky and lucky, if you call it that, in a short time frame. But I think it's these two slides from the same portfolio at different times. I think they show again an example of like how my strategies have evolved. Going from beta to speculative alpha and riding hype, and unfortunately I was included in the hype. I mean, I was one of the herd, let's say, and took way too big risks, etc. But of course that's easy to say, because let's say the bulk samples from Commonwealth, for example, would have been stellar. Would I have learned my lesson then if everything went my way? No, probably not. So that's another point. It's like bear markets are the best place to learn, because you're forced to learn. You're forced to think about, why is this junior down 80% and cannot get any money? And why is this other junior, let's say, why does this other junior have a flat share price, which is outperforming simply by staying flat and not going down a lot? Okay, why do they have access to capital? Why does this work and this doesn't work? Etc., etc. So it's like, when people sell out and say, I'm never buying miners again, that's basically, you're saying that I'm refusing to evolve. I'm not doing any more work. I'm accepting the fact that the past here and me buying high, that's a sign that you can't make money. And then again, I'm giving up. No, if you give up now, if you listen to Rick Rule, but in his words, best opportunity, or pretty much best opportunity in the last 49 years. If you can't see that, or cannot buy, or are inclined to sell, that should tell you something, that you have work to do. That you don't understand how markets work, you don't understand how sentiment works, you can't even spot an opportunity, so you don't even know what an opportunity looks like. So that requires a lot of self-reflection. But I'm hopeful that, more and more people will take the responsibility and put in the work and actually learn, and don't see a highly volatile market and a very hard market as a curse, but it's like a challenge. Okay, if people say this market is so hard, etc., I'm gonna beat it, and just stick to the sound fundamental principles of buying low, selling high, or buying cheap. I like the expression buying cheap more than buying low, because low can still be overvalued. And then, how do you beat this? Obviously, if you just look at this chart, it would be obvious you just buy, in this case, low, which is typically also cheap, and then wait. The only thing you need to do is buy cheap and wait, buy cheap and wait. But most people can't wait, and they sell low and sell cheap. I hope this rant, is kind of a, like I think I said in the last video, a call to arms, so to speak. It's like, it doesn't matter how past your investing past has been. We don't invest in the past, we invest in the future. So you must always, the only thing you can do is make the most sound decision right now, based on what we know at the moment and what we think about the future, for example. And that's why it's like up here, beta might be not be the best idea. Down here, beta is suddenly a good idea again. And alpha is typically, I mean, that's more, make some money all the time but still have swings, more like this kind of action. But regardless if you pick beta or alpha, you're gonna have big swings in this sector, and you have to be comfortable with that. You're gonna be down 50%, you're gonna be up 100%, you're gonna be down 50%, you're gonna be up 100%, you're gonna be down 50%, you're gonna be up 300%, you're gonna be down 70%, and yada yada yada. So take responsibility and just understand that, again, the past is irrelevant pretty much, and we invest for the future. So when the past is the worst, the future is the brightest. And as long as you get that into your head, I think you'll have a much easier time. And again, always keep in mind that all the advice you read on Twitter or forums, etc., there's a 95% chance that advice or opinion comes from someone who does not beat the market. But if you, again, stick to the principles and are able to, shut out all the 95% of noise, you'll do well. And it's like me now, for example. I don't have much things to do. I know it's cheap. Rick Rule says it's the cheapest in 49 years. So how big of a problem do I have? Nothing really. I mean, how can I mess up the best opportunity in 49 years? I mean, there's only really one way to do that. That's like, sell. So I'm not selling. If we go even lower, I mean, again, there's some micro-cap companies out there that's trading at, 6 million market cap. I mean, if they get cut in half to 3 million, I mean, Jesus, they'll probably do 1,000% from the next bottom to the next top. So again, if it's a blessing or a curse, it's all up to your viewpoint of it. This is a curse if you look at the past and what you have experienced. This is also at the very same time a blessing if you look at the expected future. Everybody sees the same situation, but everyone views it in a different way. And 95% of people right now view this as a curse and an example of how you cannot make money in miners. Whereas a guy like Rick Rule sees this as this is the best time to get in to make money. Yeah, do your own due diligence. I own shares of probably all companies I mentioned, not Bear Creek Mining. I own shares of Snowline Gold. Make up your own opinion. This is not investing advice. And again, it's like just one thing is like never stop learning, because there's nobody out there that's going to be able to hold your hand forever. So like my mantra has been is like, I mean, I am trying to teach people how to fish. I think these concepts, etc., why I talk so much about investing theory, that's probably the best gift I can give anyone. Sure, I can, I think Snowline is a great case, for example, and I did an article on that. But Snowline will not be around forever, if you know what I mean. That opportunity will someday pass. So it's up to you to learn how to fish yourself. And otherwise, I mean, that's the gift that keeps on giving. If you learn how to compound money and spot opportunities and how to think about the market, that's going to be worth a lot more than some hot stock tip I or anyone else can give you. Pretty much that. So learn how to fish, put in a lot of work and effort, learn how to fish, and always check yourself when you're buying or selling. you should be able to write down why you're buying or selling. And if you find yourself that your reason for buying or selling is not really rational, it doesn't really make sense other than that you're bullish or bearish, if you know what I mean, that should give you pause. You should always know why you're buying or selling. And right now there is not a person on earth really that can say, I am selling gold juniors especially because they are overvalued. No, people are selling because they give up or are afraid that price might go even lower. And that is market timing. I have no idea when the gold juniors are going to go up again, broadly. I just know they're cheap. Objectively, they're cheap. Objectively, Rick Rule says they're the cheapest in 49 years. That is enough for me to know that it is a rational thing to do to buy gold companies right now. If Rick Rule says these are the most expensive gold miners he has seen in 49 years, that's a rational reason to sell gold miners. Yeah, anyway, thanks for listening. Thanks for sticking through another rant. Good luck out there. Keep your chins up. We're not gonna lose out. We're not gonna squander this opportunity. We're gonna stay cool, calm, and collected. Hit the like button if you like this stuff. Bye.